Good afternoon, everyone. Welcome to this webinar. On behalf of Women and Young Members Excellence Committee of ICAI, it is my pleasure to welcome you all to Yasaswini and Idol Series 63. It is a Wednesday series of programs conducted by the WIMEC for the Women CAs and by the Women CAs. This series is an extension of Sky High Symposium, which concluded its 100 episodes. It is one of the committee's initiatives to not only disseminate information to women members on technical updation and non-technical skills, but also to empower and inspire women members to come at forefront and realize their verbal skills at the public forum. As our CA week celebrations are also going on, so happy CA day to all the members who have joined today. And now the first session was on the topic of practical aspects in issue of Form 15 CB, which are taken by CA Gitanjali Chojare, ma'am. CA Gitanjali Chojare is a seasoned chartered accountant. She has advised corporates, MSMEs, startups, and international clients on tax planning, litigation, and regulatory compliance. With deep expertise in cross-border taxation, GST, and government incentive schemes. Her value-driven, client-centric approach has made her a trusted advisor. Yeah, welcome, ma'am. You
Thank you.
can, yeah, over to you. Thank you, ma'am.
Yeah, thanks, Kathy. I just want to thanks first to the Women, Young and Women Empowerment Committee for giving me the chance to present my subject in this forum. So whether my screen is visible, my presentation is visible?
No, not as of now.
Is now visible?
Yes, it is visible.
Okay. The topic which I am going to present today is the practical aspects of in the issue of Form 15 CB. So here I am going through first of all the governing provisions of 15 CB. So it all starts with Section 195. Section 195 of the Income Tax Act provides the TDS deduction to be made in case of payment made to the non-resident. So 15 CB is the basis of Section 195. So it is important to first understand Section 195. It is quite vast. So I'm starting with the basic provision of Section 195. Here 195(1) states that any person responsible for paying to the non-resident, not being a company or to foreign company, any interest other than Section 194 LB, LC, and LD, or any other sum chargeable under the provisions of this Act, except the salary, shall at the time of the credit of such income to the account of payee or at the time of payment thereof in cash or by issue of check or by draft or by any other mode, whichever is earlier, deduct the income tax thereon at the rates in force. Provision has been given that the Section 195, 195(1) provides that the payment has to be done at the time of credit or payment, whichever is earlier. However, exception has been given under Section 1023D, where government or public sector bank and financial institutions are exempt from this provision, and they have to do the payment only at the time of payment of interest. Explanation 1 to section 195 states that if any interest or any other sum has been credited to any account, like the suspense account or interest payable account, in such a case, the crediting will be deemed to be the credit of such income to the account of payee, and accordingly, TDS has to be done. Explanation 2 provides that obligation to comply with subsection 1, that is, and to make the deduction thereunder applies and shall deem to have always applied and extend, shall be deemed to have always extended to all the persons, resident or non-resident, whether or not the non-resident has a residence or a place of business or a business connection in India. So specifically this giving the clarification that even if the non-res, even this provision will be applied to all the deductee, whether it is a resident or non-resident. So it is not dependent on whether the non-resident has a place of business or business connection in India. So even if the non-resident is not having the business connection or the place of business in India or any presence in India, still they are liable to pay the interest, pay the TDS under section 195 if it is chargeable to tax in India. One of the important provision under 195 is 195(6), which actually provides that whatever the information and the details which is required in respect of the TDS under section 195 has to be reported in the specified form and manner which is prescribed under the rules of the income tax rules. That is particularly, this is talking about issue of form 15CB in case of the certification by a chartered accountant, and 15CA, that is declaration by the payer who is doing the payment to the non-resident. So the relevant provisions are given in the rules. First of all, I'm giving you the what is the snapshot of section 195. It is basically divided into 7 subsections. Section 195(1), it talks about the TDS applicability in case of sum chargeable under the tax. So here TDS will be applicable only if the amount is chargeable to tax. If it is exempt under the act, then exempt under the Income Tax Act, then the TDS will not be applicable, and accordingly the 15CB will also be not be applicable. Section 195(2) talks about the application by the payer to the assessing officer in case he is of the opinion that the sum is not chargeable to tax or the full amount is not chargeable to tax. In such a case, he can apply to the AO to determine the taxable portion to arrive at the TDS liability. The section 195(3), payee, that is the recipient of payment, has to apply or can apply for the nil or lower deduction TDS certificate. Under section 195(4), it prescribes the validity of the certificate which is issued by the AO under section 195(3), that is for a nil or lower deduction TDS certificate. 195(5) provides the power of the CBDT to make the rules. 195(6) talks about the mandatory reporting under section 15CA and 15CB. 195(7) provides the power of the CBDT to notify the specific persons to mandatorily seek the AO's determination under section 195(2). So the overview of, now we will discuss in detail the section 195. So it governs the tax deduction at source on the payment made to the non-resident, whether it is corporate, that is company or artificial juridical person, or non-corporate entity, that is individual, HUF, firm, AOP, BOI, or trust. So it does not restrict that the payer in such cases will be resident or non-resident, only non-resident. and it applies to any person who is going to do the remittance to the non-resident. As we said, it applies to the both resident or non-resident payer. Even if the individual or HF are covered in respect of Section 195, as if the transaction is chargeable to tax, uh, as it has not specified any exceptions like for non-audit cases. So even the non-audit cases of individual and HF will also be covered here. So sometimes we check that in case of non-audit cases, TDS applicability is not there, but that is the exception under Section 195. It applies to the non-resident even if they are not having the presence or business connection in India. This we have discussed in explanation 2. So even if the non-resident is not having the presence or business connection, they are liable to do the TDS under Section 195 if the sum is chargeable to tax in India and the income is arising with respect to the business which is carried out by the non-resident in India. So for example, if the non-resident is has done some contractual work or like provided the fees for technical services or any kind of activity they have carried out in India, uh, and they are not having the PE in India. In such cases also, they are liable to do the TDS if if the amount is chargeable to tax in India. So if Indian company, if for example the foreign non-resident is doing the payment to the US citizen with respect to the business activity which is carried out in India, in such a case TDS will be applicable under Section 195. It applies only when the payment is chargeable to tax in India. In order to determine the chargeability of chargeable to tax, we have to refer to Section 5 and Section 9 of the Income Tax Act 1961 in order to arrive at the conclusion whether it is chargeable to tax or not. TDS is applicable on the gross amount of the income at the time of payment or credit, whichever is earlier. TDS will be done only on the gross amount and not on the net amount. And the time of the credit is the time of TDS deduction is the credit or payment, whichever is earlier. So if the entry is posted on the books of account of the payer with respect to the booking of the expenditure, that will trigger the TDS liability under Section 195. Even if the payment is not yet due. So vice versa, if the advance payment has been done against the taxable service to the non-resident, in such a case, TDS will be applicable in case of advance payment also. Here only exception is provided, as we discussed earlier, is with respect to the government or public sector bank or public financial institution where deduction is on the payment basis. Can you ignore the error? It is a public sector bank. It is wrongly written as section. So what are the types of the payment which are covered here under Section 195 are the interest, royalty, fees for technical services, and other sum. However, salary is not considered under Section 195 as salary is taxable under Section 192. So the TDS liability has to be TDS has to be done under Section 192 and not Section 195 in case of salary. So under Section 195, there is no limit prescribed as such for the TDS deduction. So TDS starts from rupee 1 on also. Likewise, in other section, we know that the threshold limit has been given for TDS deduction, but such kind of threshold is not there in under Section 195. So basically, the objective of Section 195 is to ensure that the income arising to the non-resident in India is taxed at source and government should not lose its revenue in terms of taxes. So what are the types of payment covered under Section 195? As discussed, the royalties, fees for technical services, specified interest, as some of the interests are not covered, therefore it is mentioned as a specified interest. dividend, capital gain, and business profit or other income. These are the types of payment which is covered under Section 195. So except the business income and capital gain, or rest of the income like interest, royalty, fees for technical services and dividend are taxable on gross basis. So if the royalty is paid to the non-resident of rupees 1 lakh, in such a case, the TDS has to be done on rupees 1 lakh. Unless the PE or fixed base exists. So in case the non-resident is having the PE in India, in such a case, that will be taxable as a business income. As you know, the business income is taxable on the not on the gross basis, but on the net basis. However, we cannot directly do the TDS on the net basis. In such a case, we have to ask for the lower deduction or nil lower deduction TDS certificate from the payee, so as to so that we can do the TDS on the net basis. Otherwise, we have to do the TDS on the gross basis only. If your client is asking that this is the business income or this is the capital gain, so do the TDS on the net amount. Like capital gain, they have sold the property of rupees 1 crore, and the cost of the property is 50 lakhs, and they're asking that you have to provide the 15 CB on the net basis, that is 50 lakhs only. That is the capital gain. Then it is you can't do this because Section 195 does not provide for the TDS on the net basis. You have to do the TDS on gross basis only, except where the payee is providing the lower deduction certificate to proceed with the means taxation on the net basis. Payment of salary to non-resident is chargeable under Section 192 and not Section 195 of the Income Tax Act 1961. There are certain interest payment to the non-resident which are not covered under Section 195, which we are going to discuss in next slide. So the interest payment which are not considered under Section 195 are 194 LD. That is the income by way of interest on rupee-denominated bonds of the Indian company or government security issued to the foreign institutional investor or qualified foreign investors. So this is particularly governed by 194 LD. In case of 194 LB, interest from infrastructure debt fund is not covered. 194 LC, that is interest on external commercial borrowings issued by the Indian companies to the non-resident. It is covered under Section 194 LC and not under Section 195. So these are the sections which is specifically provided as exclusion in Section 195(1). So they are out of the purview of Section 195. So when to file Form 15 CB? So the liability to file the Form 15 CB arises due to the two conditions. First is when payment is chargeable to tax. So first of all, you have to check whether the sum of money which is payable to the non-resident, whether corporate or non-corporate, whether it is chargeable to tax under the Income Tax Act 1961. For that, you have to check Section 5, that is scope of total income, Section 9, that is income, Section 9, that is income deemed to accrue or arise in India. So the deeming provisions with respect to taxability of income of the foreign resident has been provided in Section 9. So you have to check the taxability under Section 5 and 9 to arrive at the conclusion whether it is chargeable to tax or not. If the income is exempt under Income Tax Act, then 15 CB is not required, like in case of income exempt under Section 10. For example, if a non-resident is receiving the interest on the NRE account, that is non-resident external account, that is exempt under Section 10. So in such a case, as the income is exempt under Section 10, interest on NRE account is not taxable, and then accordingly Form 15CB is not applicable. And even the TDS will not be there under Section 195. 15CB should also be filed when the payment to non-resident is chargeable to tax under the Income Tax Act, but it is exempt under the DTAA. For example, there are situations where the particular income is chargeable as per Income Tax Act, whether uh, it is deemed to accrue or arise in India or because of the deeming fiction under Section 9. In such a cases, but sorry, but it is not exempt, but it is exempt under DTAA, like due to make available clause. If the recipient is not able to perform the services which is provided by service provider, latter, that is knowledge is not transferred from the service provider to the service recipient. In such a case, it will be covered under make available clause. Certain specific DTAA provides that one services should be make available to the recipient, then only the TDS will be then only the transaction will be taxable as per Article 12 of that DTAA. For example, such kind of provision is there in case of USA India DTAA, also Singapore India DTAA. So such cases we have to verify. Another example we can take that capital gain, which is taxable under the Income Tax Act, but it is exempt as per India Singapore DTAA. So in such a scenario, we should 15CB should be filed claiming the exemption under DTAA. So I have to provide all the details, the taxability as per Income Tax Act and the exemption which is provided as per DTAA. Second point is when the aggregate payment is more than 5 lakhs. So first point, when you are liable to file 15CB is to check whether the payment is chargeable to tax. And second is if the aggregate payment is more than 5 lakhs. So this is the threshold limit which is given to 15CB. So if the payment is less than 5 lakhs, then 15CB will not be applicable. Then you have to proceed with Form 15CA only. If the single payment does not exceed 5 lakhs, however, the aggregate payment during the financial year exceeds the 5 lakhs, then also 15CA is required to be filed. For example, your current invoice value is only 1 lakh. However, you are supposed to receive the balance invoices in the remaining period, which is amounting to 6 or 7 lakh. In such a case, it is exceeding the limit of 5 lakhs. And because of that, the 15CB will be applicable. So no 15CB will be required if the amount is not in excess of 5 lakhs. Purpose of filing the 15CB. So the purpose of filing 15CB is that in Form 15CB, chartered accountant certify that he has verified the agreement between the remitter and beneficiary requiring the remittance. So it is very important that we should verify the agreement or the contract which is entered between the remitter and beneficiary, that is the recipient, in order to verify what is the nature of transaction, what are the terms and conditions of this contract, so that we can arrive at the conclusion whether it is taxable or not. And also based on this only, we can arrive at the taxability and the rate of tax which is applicable. Classification of the income is also dependent on the nature of service. So it is very important to verify the agreement between the remitter and the beneficiary in order to comply with 15CB. And second is he or she has to examine the relevant documents and books of account to ascertain the nature of remittance to be made to the non-resident and determining the rate of deduction of tax at source as per provisions of Section 195, read with Chapter 17B. So as mentioned, we have to verify as a chartered accountant before certifying 15CB, we have to verify the agreement between the remitter and the beneficiary, and also the other relevant documents like PO, or if there is a we can say additional contract or contract which is done supplementary to the original contract. In such a scenario, such kind of documents we need to verify. And also the books of accounts need to be verified so that we can derive our opinion. Uh, this is particularly important as some misconduct behavior has been observed by the institute, and in case of one of the CA, the action has been taken against the CA as he has given the opinion or given the 15 CBA, issued 15 CBA only based on the invoices which is received from the payer, and he has not verified any other contract or agreement or any other documents to arrive at the taxability. And based on only on the invoices, he has certified the 15 CB, and because of which he is liable for action by the ICI. So, in order to arrive at the taxability and the TDS amount, rate of TDS, we have to particularly look into the double tax avoidance agreement also. As in case of payment to the non-resident is eligible to avail the benefit of the DTAA also. As per section 92, non-resident is eligible to claim the tax position whichever is beneficial, either the Income Tax Act or the double tax avoidance agreement, that is treaty benefit. So in order to take the treaty benefit, we have to understand the DTAA. So particularly India has entered into the DTAA agreement with more than 90 countries at present. The purpose of the agreement is to avoid the double taxation and sharing of the revenue by the two countries as per mutually agreed terms between the countries. One of the two purpose is to avoid the double taxation, like the economic double taxation or juridical double taxation, and sharing of the tax revenue. So, sharing of the tax revenue is particularly negotiated between the two countries, and based on the negotiation, they mutually agreed on the taxability of the tax revenue. Assessee can either use the provisions of the Income Tax Act or provisions of the DTAA, whichever is more beneficial to the assessee as provided under Section 92 of the Income Tax Act. So if the some transaction is taxable under the Income Tax Act at the rate of 20%, however, under the DTAA, that transaction is taxable at the rate of 10%. In such a scenario, the beneficiary, or we can say the payee of the payee, can avail the benefit of the DTAA, and which is obviously is more beneficial to the assessee. And in such a scenario, they have to provide the documentation like TRC, no P certificate, Form 10F, in order to take the benefit of DTAA. If income is exempt under DTAA, then no TDS is needed, as they are opting for the beneficial provisions. So assessee have the option to take the benefit of the beneficial provision for different sources of income separately. For example, if they are having the income from the house property, and they are opting to pay the tax as per the DTAA, because the income on house property is chargeable only in case of the residence country, and they are also having the income from fees for technical services, and Income Tax Act provides the beneficial provisions. Then in such a scenario, they can opt for the different provisions like Income Tax Act and the DTAA for different sources of income. So there is no restriction as such on this. And they can also switch to use of different provisions in different years for same type of income. So there is no restrictions. No one will ask, even the assessing officer will not ask why you have taken the benefit of DTAA in AY 25-26 and why you are taking the benefit of Income Tax Act in AY 26-27. So such kind of questions will not be there. In order to avail the beneficial provisions of DTAA, assessee is required to provide the TRC It is given under Section 94 of the Income Tax Act. Also, Form 10F is required in case of the certain particulars are missing in the TRC, then Form 10F is required. So to order to avail the beneficial provisions of TTAA, you have to pay has to provide the TRC. Otherwise, the tax liability will be calculated as per Income Tax Act only. So it is particularly very important to go through the DTAA to understand the DTAA provisions. Particularly, I got some of the queries, like in case of the India-US DTAA. One of the question raised was with respect to the fees for technical services. Sorry, with respect to the royalty, where they are referring to the clause. In the clause, it is mentioned that if the transaction has been carried out between the first 5 years of the agreement or contract, uh, as per contract of DTAA, then the tax rate will be 10%. However, after the 5 years of the DTAA agreement, the taxability will be at the rate of 15%. So the agreement or the contract which is referred in the DTAA is talking about the DTAA agreement and not the agreement of your customer. So one of the query I got that it is mentioned that the first for first 5 years the tax rate is 10% only, and for after 5 years the tax rate will be 15%. So we have entered into contract with our customer and that is not more than 5 years. So can we apply the TDS rate of 10%? As per DTAA. So it is the wrong interpretation. The contract or the agreement which is referred in the DTAA is talking about the contract of contract date of DTAA and not with respect to your customer. So you have to be careful while interpreting the DTAA. The general aspects of Section 195 are covered here. So payer in case of 195 is resident or non-resident, and payee is only non-resident. Payer can be resident or non-resident, but payee should only be non-resident. Then only 195 will applicable. So payee will be non-resident, either corporate or non-corporate entity. Non-corporate entity like individual, HUF firm, LLP, AOP, BOI, trust, etc. Another point which needed to be taken into consideration is with respect to the non-corporate entity in case of partnership firms. So particularly with respect to the partnership firms in India, the tax liability is paid by the partnership firm only and not by the partners. So it is the responsibility of the partnership firm to pay the tax, and whatever the share of profit or the salary which is received by the partners, this is taxable in their own hands. However, such kind of scenario is not there in some of the foreign countries like USA, Germany, where there is a concept of tax transparent entity. So, what happens in such a situation that um, partnership firm income in foreign countries like USA or Germany is taxable in the hands of the individual partners of the firm and not in the hands of partnership firm. So you have to take a precaution that the TRC which you are receiving from the partnership firm should be in the name of partnership firm only. Otherwise, you have to check you have to do the TDS of the partners of that firm. So TRC should be in the name of the partnership firm only. This precaution you should take in case of the non-resident. Deduction of TDS is on the interest and any other sum chargeable to tax, as we covered earlier. Basis of deduction is the gross amount paid or payable. So person responsible in 195 1, it is mentioned that the person responsible has to do the TDS. So who is the person responsible? So first of all, the person who pays, like the company, firm, or the individual person who pays, the principal officer of the company, So in case of company, there must be a principal officer who is appointed as authorized person to take care of the compliances under the Income Tax Act. So the principal officer of a company or authorized dealer in case of banks is the person responsible. Business profit. If non-resident has no P in India, then business profit is not taxable in India. Uh, as this is the precondition which is given under the Income Tax Act and also the DTAA. Make available. As we discussed earlier, you have to check the make available clause in DTAA. So if there is a transfer of knowledge from the service provider to the service recipient, then only the make available clause will satisfy. In such a case, only the payer is eligible to deduct the TDS of the pay. If there is no transfer of knowledge, then make available clause will not satisfy as per DTAA. In such a scenario, you have this the income will be exempt under DTAA and there will be no TDS. Only thing is that you have to be cautious while interpreting the make available clause with your transaction. This is particularly make available clause is particularly given in article royalty on and fees for technical services. So make available is particularly applicable in case of fees for technical services. Secondment. Sometimes it happens that the foreign company, that is the holding company, assign the employees in India to Indian company for a particular project. In such a scenario, we have to check whether it is taxable or not. For that, we have to check the arrangement which is done between the holding and the subsidiary company, uh, whether uh, whether the expenses of the employee is borne by the foreign company or Indian company, what are the terms and conditions, who is having the uh, employer-employee relationship. This kind of scenario we have to check, and the actual arrangement. Like if the one employee is provided to the foreign company and the Indian company is only responsible for all the acts and the acts done by that non-resident employee in India. In such a case, they will be uh, fitting in the relationship of the employer and employee. In such a scenario, TDS will be done under section 192 and then 195 will not be applicable. However, in some of the cases, they do the arrangement like the foreign company assign the technical person to the Indian company, and whatever the services provided by that technical person, they are charging the fees for technical services to the Indian company. In such scenario, we can say that this will be classified as a fees for technical services, and then the TDS will be applicable under section 195. So here we have to check the arrangement and the employer-employee relationship and the other factors like who is bearing the cost, and who is responsible for that employees, even the retirement compensation. Like these things we have to verify in order to arrive at the taxability in case of secondment of the employees. So next point is with respect to there are cases that there is the apportionment of expenses by the foreign company. For example, if they have taken the software um, centrally at the foreign company, and they have given the rights to the various subsidiaries operating in the other countries of the world and also India. In such a scenario, they do the apportionment of the cost, like the IT cost they split based on the number of headcounts which is using that IT services, or even the CFO services are apportioned to the subsidiary company based on the turnover. So in such a scenario, we have to verify what is the nature of payment, whether it is taxable as such. If there is no if the payment has not been done by the foreign company or by the head office, So we have to independently check the taxability of that transaction, and based on that we have to arrive at whether it is taxable or not. So if the payment has not been done by the holding company, and the Indian company is only directly responsible to pay in case with respect to such apportionment cost, in such a cases that will be a chargeable transaction that is taxable in India, and so the TDS will be applicable even if the reimbursement is done on cost to cost basis. So we have to take the precautions while arriving at the taxability of the apportionment cost. And also there are cases of reimbursement of expenses, like the if foreign if the Indian employee go outside India for some training purpose, like for 10-15 days. In such a scenario also, the foreign company charges the travel cost of that employee plus the stay and accommodation cost to the Indian company. So in such a situation, we have to check whether the reimbursement is done on cost to cost basis, and also what is the nature of payment, and based on that we can decide whether it is taxable or not. So particularly if the reimbursement of such kind of expenses like travel, air tickets, is on cost to cost basis, it will not be chargeable to tax in India, and the TDS under 195 is not applicable. However, if there is some markup is added by the foreign company over and above the cost which is incurred by them, in such a scenario, you have to apply the TDS under section 195. However, also their question arises whether we have to do the TDS on the whole amount, that is cost plus markup, or only on the markup. So that you have to take care. So next issue is with respect to the residential status of the payee. So you have to verify the payee status, whether it is resident or non-resident, as the 195 section will be applicable only in case of non-resident. So for that, you have to refer to section 6 of the Income Tax Act. And residential status has to be considered at the time of deduction of TDS. So if you are doing the payment in the month of June, then you have to check in the month of June of an individual, then you have to check the status of the payee as of June. So you cannot wait till the end of March to arrive at the status of payee. At the time of making the payment, you have to arrive at the status of the payee, whether it is resident or non-resident, and based on that, you can go for section 195 or the other section which is as applicable. So TDS amount should be rounded off to the nearest rupees 10. It is given under section 288B. So rounding off till rupees 10 is allowed. Purpose code. Mostly in 15 CB, you have to provide the purpose code. This is crucial for reporting and categorizing the type of foreign exchange transaction. Here you have to be cautious. Wherever you are reporting the purpose code, please check with your bankers whether the purpose code is fitting with the type of transaction. Because most of the time it is observed that we issue the 15 CB, and after the 15 CB arrived at banks, they raise the question that the purpose code which is quoted in 15 CB is not correct. Then you have to revise the 15 CB, because if they raise the question, they don't accept the 15 CB, and you have to again cancel that. You have to again issue the new 15 CB. So towards such kind of scenario, first of all, you should check the purpose code with your bankers. And also check DTAA, which is applicable DTAA, whether the payee country, whether we are having the DTAA with the payee country, and also certain the classification and taxability of income. So for that, you have to really go through the DTAA in detail to arrive at decision whether it is classified and under whether it is taxable first of all. Then if it is taxable, then under which clause under which article it is taxable, like whether it is taxable as royalty FTS, or whether it is taxable as capital gain or business income. So for that, you have to go through the DTAA in detail. So whether payment in kind is also covered under TDS. So as per one of the case law, it is mentioned that the TDS is applicable in case of payment in kind if the sum is chargeable to income tax. So even in such a case, you have to do the payment of, you have to do the TDS payment. You can recover that TDS from the recipient. As there is no monetary consideration, you have to do the recovery separately. So TAN is required to deduct and pay the tax to the government. So payer should have the TAN in order to deduct and pay the tax, and also report this to the government, because only after having the TAN, pay payer can report the TDS deduction details, and then only the payee will be eligible to claim the TDS. So it is very important. So what is the foreign exchange rate which should be applied in respect of foreign transaction, in respect of section 195? It is given under rule 26 and 115 that telegraphic transfer buying rate of State Bank of India, as on the date on which tax is required to be deducted at source, should be applied. So the you have to check the SBITT buy rate on the date of deduction of TDS. So SBI discloses the exchange rate on daily basis on their website. However, it is available for that day only. So you have to be cautious that you should take the copy of that foreign exchange rates, which is disclosed by the State Bank on daily basis, so that you will have the record of the foreign exchange rate for the whole year. So in between, if your transaction date is, for example, is last month, and you are doing the TDS on 1st of next month, in such a scenario, you should have the exchange rate as on 13th June, or we can say if you are doing the TDS on 1st July, then you should have the TDS rate on 13th June in order to arrive at the TDS amount in INR. As we discussed earlier, residential status has to be determined as per Section 6 of the Income Tax Act, which this is important in order to check whether it is deductible, TDS is deductible under Section 195 or not. So whether filing of ITR is required to the non-resident if the TDS is done under Section 195. So the question answer will depend on the whether a TDS has been done on as per DTAA or Income Tax Act. If the non-resident, if the TDS has been done as per DTAA, then and they are also want to claim the DTAA benefit. In such a scenario, they are required to file the income tax return. However, if the TDS is deducted as per Income Tax Act, then non-resident is exempt from filing the income tax return. There are scenario like the TDS has been deducted as per income tax return, as per income tax rate, like at the rate of 20% plus surcharges at the higher rate. However, the payee wants to disclose the income as per DTAA with the concessional benefit of, we can say, 10%. In such a scenario, they can file the ITR and they can claim the concessional rate of 10% as per DTAA, and can claim the balance amount difference of 10% as a refund in their ITR. So what is the penalty if you fail to comply with Section 195(6)? So the penalty is rupees 1 lakh for failure to furnish the information or furnishes the inaccurate information which is required as per Section 195(6). So the penalty will be 1 lakh. So payer has to be cautious while doing the payment to the non-resident. They have to check the applicability under Section 195. So DSC is mandatory for issuance of 15 CB. Non-filers of ITR, Section 206 AB, which is applicable in case of non-filers of ITR, which is prescribing the higher rate of TDS, has been omitted by the Finance Act 2025 with effect from 1st April 25, and therefore this is not applicable. And earlier also this is applicable only in case of non-resident which is having the P in India. So as we discussed earlier, the chargeability of tax is very important. So you have to check section 4, that is charge of income. Section 5, scope of total income of non-resident. Section 9, deemed income provisions, and section 14, that is heads of income, in order to arrive at the chargeability or chargeability to tax. So first, section 4 talks about charge of income for the assessment area in respect of total income of the previous year. Section 5 gives the scope of total income of non-resident, which is taxable. So mostly it includes the income which is received or deemed to be received in India, or accrues or arises or deemed to accrue or arises in India. So only the income which is received or accrues in India is taxable in case of non-resident. Section 9 deeming provisions are given. We will discuss in detail in next slide. And the heads of income, as we know, the common heads of income are salary income from house property, profit and gains from business and profession, capital gain, and income from other sources. So the whatever the income which is chargeable to tax will classify in this 5 heads of income only. So the heads of income is particularly important, like we said, in case of fees for technical services, as per DTAA, if the make available clause is there and the transaction is not fitted into the make available clause, and therefore it is not taxable as per Article 12. In such a scenario, we have to check whether it will be classified as a profit and gains from the business of profession. However, the profit profit will be taxable from business and profession only if it is having the P in India. So if there is no P in India, in such scenario, it will be also exempt under income from business and profession. And in such a scenario, pay can enjoy the benefit of tax-free return, or we can say income. So taxability, we have to check as per Income Tax Act and as per DTAA in order to check which provisions are beneficial to the payee. So nature of transaction in case of the business income, it is taxable under section 911 and under OECD model DTAA, it is taxable under Article 5, 7 and Article 14. So Article 5 particularly talks about the permanent establishment. Article 7 talks about the income from business and profession, and 14 talks about the dependent services. So in such a in case of business income, you have to refer to Article 5, 7 and 14 of DTAA. Royalty and fees for technical services is taxable under Income Tax Act under section 916 and 7, read with section 115A. So the taxability of the deeming fiction is given under section 9, and the corresponding rates with respect to the royalty and FTS is given under section 115A. Under DTAA, you have to refer to Article 12. Capital gain will be taxable under section 911 and section 45. And under DTAA, you have to refer to Article 13 of corresponding DTAA. Interest income is taxable under 915, and for tax rate, you have to refer to section 115A. And under DTAA, it is taxable under Article 11. Dividend income will be taxable under 914 And rate, you have to refer section 115A. And for DTAA, you have to refer to Article 10. Salary income will be taxable under section 912, where it is provided that whatever the salary which is provided, salary which is provided to the non-resident for the services rendered in India will be taxable in India. So wherever the services are rendered in India by an employee, it will be taxable in India, and it will be covered under 192 TDS. And the corresponding article is Article 15. So even if even in case of the foreign company, they are not having any presence in India. However, their employee is working in India. Physically, they are in India and working on remote basis also. In such a scenario also, the TDS liability for salary arises under section 912 as the services are rendered in India. So it is particularly very important in case of the current scenario where the our employees are working remotely. So you have to take care whether that employee is working within the country or outside the country. So if, for example, take the example where the US company is having one employee who is Indian person, person of Indian origin, we can say, and for some period, for 1 year or 6 months, he comes to India and he is providing the services remotely to the foreign company from India. In such a scenario, the salary TDS liability will arises as per section 912 because of deeming provisions, as the services are rendered in India, and so it will be taxable under section 192. Even if the US company is not having presence in India, they have to pay do the TDS compliance against that salary payment. So 195 talks about rates in force. So we will discuss this. What is rates in force? Rate or rate of income tax specified in the relevant year Finance Act. So whatever the Finance Act uh, declares the income tax rate that you have to consider, or the income tax rate of income tax specified in DTAA entered into by central government under section 90 or 98. So this is talking about the DT tax treaty or DTAA entered by the central government with the other country. So you have to refer to the uh, rate of income tax as per Income Tax Act, or the rate of income tax as specified in DTAA, whichever is beneficial to arrive at the taxability under section 195. Explanation 2 to section 195 was introduced for removal of doubts. So the obligation to comply with 195 and to make the deduction is applies and deemed to have always applied and extend and shall be deemed to have always extended to all the persons, whether it is resident or non-resident, and whether or not the non-resident has a residence or a place of business or a business connection in India, or any other presence in any manner whatsoever in India. So it is not important that for non-resident, that non-resident payer, that they should have the business connection or they should have the presence in India to do the TDS under 195. Even if they are not having the presence in India, they are liable to do the TDS if the sum is chargeable to tax in India. So, for example, if the one of the foreign company in USA is doing the payment to another non-resident, for example, UK, with respect to the business activities carried out in India, in such a scenario, TDS is applicable under section 195, even if the both of the non-resident, that is payer and payee, are not residing in India, as the taxability arises because the sum is chargeable to tax in India because of the business connection in India. Grossing up of tax. I'm taking a little bit fast now. Grossing up is particularly done in case the payee don't want to bear the burden of tax. In such a scenario, the tax payable will be the amount payable to the non-resident plus the tax thereon. So grossing up has to be done at the rates in force. Non-resident can claim the credit of the tax paid in India in their home country as per the local laws. So I have given here the example that consideration payable is 10,000, grossing up is done, 2,500 tax is added. So consideration payable is 12,500. TDS to be done is 2,500. Net amount is 10,000. Even the pay can go for the nil or lower withholding certificate under section 195(2)(3) or section 195(7). So 195(2) application can be done by the payer in respect of the part of income which is chargeable to tax. Corresponding rule and form I have given. And in case of 195(3) and 195(7), application can be done by the payee only. Uh, 195(3) particularly application is done for no income chargeable to tax, and 197 for lower or no deduction or deduction at the lower rate of tax. So only order which is given under section 195(2) is applicable. In other cases, it is not applicable. Again, another important section is section 206AA. It is regarding the obtaining of PAN. Well, what happens if the non-resident is not having the PAN? In such a scenario, the higher rate of tax will be applicable, which is the rate specified in the relevant provision of that rates in force or 20%. However, as per one of the decision taken by the Pune ITAT, it is stated that the section 206 is not the charging section, and therefore it is not the overriding section to section 92, and therefore the 206 AA will not be applicable. And also to overcome the controversy, Rule 37BC has been introduced by the Income Tax Act, income tax rules with effect from 24th June 2016, which provides the relaxation from deduction of tax at a higher rate under section 206 AA. So relaxation has been given particularly in respect of the specified payment as mentioned here, that is interest, royalty fees for FTS, dividend, and transfer of capital asset. For that, the deductee has to furnish the below details, that is name, email ID, contact number, address in the country of residence, then TRC, if it is provided by if it is issued by the home country, and the tax identification number or the unique number of his residential status. So these are the particulars which has to be provided. Then you can take the relaxation under section 206 AA and can claim the applicable tax rate. So when 15CA and CB will be applicable? So 15CA is distributed in 4 parts, part A, B, C, and D. So remittance type is chargeable to tax. Limit is the remittance. If remittance is less than or equal to 5 lakhs in a financial year, then 15CB will not be applicable. In case of part B, covered the transactions where the certificate has been obtained under from AO under section 197, or order has been taken under section 195(2) or 195(3). Then also 15CB will not be applicable. 15CB will be applicable only if the transaction is chargeable to tax and remittance is more than 5 lakhs. And part D will be applicable in case the transaction is not chargeable to tax. Obviously, 15CB will not be applicable. You have to take the certain documents from the payee in order to give the beneficial provisions under DTAA, like the TRC and Form 10F. TRC should contain the following non-resident also need to furnish the Form 10F if TRC does not contain the specified information, which is the taxpayer name, foreign address, TIN, and taxpayer status. If these details are not covered, then they have to file the Form 10F electronically. Digital 10F will be required. Then certain relevant rules are given, which is applicable with respect to section 15CA and CB. Section Rule 37 BB 1, 2, and 3 we have already covered. That is Form 15CA Part A, B, C, D. 37 BB 3 applies in case of remittances under the LRS. So whatever the remittances done by the resident under the liberalized remittance scheme as per the FEMA, and the in case of the specified list which is exempted from 15CA and CB. So the list has been given under this rule 37. 33 specified services or transactions has been mentioned where the transaction is not taxable. 4 talks about section 15 CA to be furnished electronically with DSC, and you have to submit the printout to the bankers. 15 CA can also be furnished electronically without DSC. So it is not mandatory that 15 CA should be electronically filed only. It can be electronic filing, or you can do the verification mechanism through OTP, and that is also allowed. And you can submit the printout to the AD banker along with the invoice and other documents. 5 talks of 37BB, 5 talks about the signed 15 CA can be obtained by the from authorized dealer by the IT authorities in the IT proceeding. So if any income tax scrutiny proceedings or any other proceedings is happening, then IT authorities have the right to obtain the 15 CA from the authorized dealer. That is the banker. 6 talks about 15 CBCA certificate. It must be filed and verified electronically with DSC. So there is no option, any other option in case of 15 CB. You have to digitally sign the 15 CB, that is CA certificate. 15 CC to be filed quarterly by the authorized dealer, which provides the information regarding the transactions which is done through the authorized dealer. And 37BB 8 talks about the principal deputy general of income tax rights and responsibility with respect to the administration. So what are the documents you should review before issuing the 15 CB? First of all, you should review the service agreement or the contracts, and the other documents like PO or addendum is there to the original contract, and the invoices. TRC, which is issued by the country of residence. Then Form 10F, no P certificate. Particularly, this is important in order to arrive at the opinion whether it is taxable as a business income or other than business income. So no P declaration is also important, because in case of business income, the tax rate is higher, that is 35% at present. So be cautious about this. PAN of pay, if available. So even if some of the cases payee is not having PAN, that scenario is also accepted. It is not mandatory that the payee should have the PAN. And also, if the tax analysis has been done by some other consultant, like Big Four or another CA firm, in such a scenario, you should ask for the tax analysis opinion, which is given by the other consultant to issue the form 15CB. Particularly because the most of the Big Four don't issue form 15CB, they only provide the tax analysis. Verification of invoice. So what are the points you should check in case of invoice? So check the invoice amount and the currency, name and status of the non-resident paying. So particularly status will be relevant in case of arrive at the tax rate. Because as per Income Tax Act, the tax rate differ based on the status of the status of the paying. Date of invoice, that is particularly relevant in order to arrive at in which financial year that transaction will be taxable. Description and period of services rendered. So it is particularly relevant to understand what is the nature of transaction, in which head it will be classifiable, whether it is taxable as a royalty, AFTS, or business income. That should be dependent on the nature of services. And the taxable period is also relevant based to arrive at in which financial year this will be taxable. Country of residence, address of the payee. This is relevant to come to the conclusion which DTAA is applicable in such a transaction. And also the taxpayer identification number, as this is relevant in case they are not having PAN, you require this taxpayer identification number in order to report this in TDS return. So you have to cross check all these details with TRC, Form 10F, no P declaration, and the service agreement, because sometimes it happens that the address given in the invoice and the address which is given in the TRC is different. So be cautious that all the particulars which you are reporting in 15CB should be same in invoice, in contract, and also in the TRC Form 10F, because these are the relevant and the important documents. Where the contract amount is payable in installment and has the advance component, then TDS will be applicable if the end payment is subject to TDS. All invoices issued on the contract should be within the contract value. You should be cautious that the invoice cumulative invoice value should not be more than the contract value. Otherwise, you have to ask for the addendum contract. Verification of the service agreement. Excuse me, whether I am having some more time?
No, ma'am.
Sorry, I'm just covering in 5 minutes only.
Sure.
Yeah. So next point is the verification of the service agreement. Particularly, this is important in order to understand the transaction. It is particularly important. Otherwise, we cannot arrive at the taxability of the transaction. So whether the income is royalty, FTS, or business income, that can be that we can conclude based on the nature of transaction which is given in the service agreement. So it is very important to go through this service agreement, and also you can arrive at the conclusion which DTAA is applicable to the um, to the to the respective party based on the country of residence. And also check the grossing up clause, whether the particularly you have to check the tax clause, whether the tax is going to be borne by the payer or by the payee. Based on that, you have to decide whether grossing up will be applicable or not. So if the payee is saying that tax will be borne by the taxpayer only in such a scenario, you have to do the grossing up. So whatever the payment you are doing, you have to add the tax thereon, and the net payment will be done to the payee. So the procedure for 15CB is, I have given here the link of the income tax website. Here they have given the procedure step by step how to file the 15CB. UDIN is also required to be generated and to be shared with the banker with respect to the 15CB you are issuing before processing the payment. So one of the best practices which professionals should follow is maintain the checklist like PAN, TRC, Form 10F, invoice, contract, and other documents, so that we can have the proper documentation with us. So if any further inquiry or questions asked by the department or by the CA Institute in such a scenario, we are able to provide the justification. And also the tax opinion based on which we are arriving at the taxability which is disclosed in 15CB is very important. Mostly use the latest DTAA rates and verify this with the CBDT portal. Don't go with the 15C DTAA which is downloaded back in 1 or 2 years back, and then there might be situation that the DTAA has been revised and you are referring the old DTAA. Keep the audit trail of communication and advice. So whatever the communication, email communication, or the physical communication where you have arriving at the where the nature of transaction and the taxability has been mentioned or any advice is given, keep the audit trail of this documentation. You can also go for the automation, like you can use the CA practice software which is available in the market for tracking the remittances, as we are having the multiple clients and the multiple clients will be having the multiple 15CB. So in order to track a record, you can use the software and also can use the cloud storage for previous 15CB. So whether revision can be done for 15CB and 15CA. So in case of 15CB, if any errors has been identified in 15CB, at present there is no provision under the law to file the revised form or withdrawing that form. So only thing is that you have to issue another 15CB with correct details, and you have to also keep a proper documentation to justify the two forms issued against the one transaction. Whether revision can be done against 15CA. So if the errors are there in 15CA, which is identified by the CA or the banker before processing the payment, then you can withdraw the 15 CA only within 7 working days. After 7 working days, it is not withdrawable, and thereafter you can file the 15 CA with correct details soon. So the 15 CA can be withdrawn only within 7 days. Otherwise, you have to issue the new form. So there are some FAQ. Particularly whether the payment by the branch to head office, whether it is TDS is applicable. So yes, it is applicable as per the CBDT circular. As the head office and the foreign company are treated as different person, and so the tax liability arises if the transaction is taxable in India. What happens if the TDS deducted but consideration not payable later? If we have done the TDS on the advance book entry we have done, however the transaction has been cancelled, contract has been cancelled, and the consideration is not payable. In such a scenario, you can apply for the refund of TDS as per the CBDT circular 790. When the payment to the non-resident when payment made to the non-resident for sale of property situated in India, whether TDS is applicable. So yes, TDS will be applicable if the property is purchased from the non-resident and the transaction is taxable, unless the lower deduction certificate has been obtained. TDS applicable on fees or charges levied by diplomatic mission in the course of its official duties. TDS is not applicable. It is exempt as per circular number 9. In case of import of software by the taxpayer in the business of export of software, if the import has been done along with the hardware, then that transaction is exempt under as per circular number 588. Whether TDS is applicable on professional fees to non-resident. So in such a scenario, you have to check the dependent person clause in DTAA. If they are having the presence in India or having the PE in India, then only the TDS will be applicable in case of professional fees payment to non-resident, that is non-corporate entity. Otherwise, TDS will not be applicable. Thank you. Hello.
Hi. Thank you for the wonderful insight. Actually, there is some question and answer.
Yeah.
So I'm just taking it quick because we are running out of time. So I think Amita Manohar was asking what kind of agreement is required. Most of the client provide bill only. I think you have covered in slide 23 and 24. And Christy Vijula was asking for issuing a form 15 CB for interest to NRI for NRI account. What audit documentation should we have or maintain or request from client? I think the same has been covered. I hope Amita ji.
I think interest on NRI is not taxable. So the documentation only you can take the statement of the client NRE account statement to justify that it is the NRE account, and so the interest will not be applicable. That documentation is required. And first question is
she was asking about if client only provide bills, so what kind of agreement is?
So you can take the email communication. If they are not having the contract, you can take the email communication either between the service provider and service recipient, or either you can take whatever the details which is sharing by the client. He's saying that this is the kind of transaction and these are the details of the transaction. Then at least take the email from that client on means you can have the paper record that based on these details provided by the client, we have arrived at the taxability.
So Satyanarayan ji have a question. What about capital gains on mutual fund investment of non-resident?
So it has to be means as per income tax it is taxable. However, you have to also check the taxability as per DTAA. Particularly, one of the case recently, as per I think India Singapore only, the DTAA does not states that the mutual profit and gains from the mutual fund is not covered under the capital gain article of the DTAA, and because of that, it is exempt as per DTAA. So you have to check the respective countries DTAA in order to arrive at whether the transaction will be taxable or not. So there is no straightforward answer on this.
The question from
बोलो
Meena.
मुझे मैं कार्तिक से बात की
Yes.
When can the
कार्तिक
CA cancel
मैं
the
10
issue
मिनट लगे
of
खाली
15 CB?
Sorry. Continue.
When CA can cancel issued form 15 CB? So you explained it slide
Yeah,
like
I think it
cannot
can be
cancel it.
it can be cancelled only within 7 working days. Otherwise, you have to issue new 15 CA only.
Then there's if the payment is made to NRI in Indian rupees to his Indian bank account, with the 15 CACB required.
From NRE to NRO account, I think.
Yeah.
Okay,
Because they haven't questions is not clear whether it is from NRE to NRI.
So I'm giving the answer both way. If the transfer is done from NRE to NRO for 15 CB will not be required as the money is coming into India. However, in case of the transfer from the NRO to NRE account, in such a scenario, from 15 CB will be required as the money is going out of India. So we have to ensure that the applicable tax on that income has to be paid to the government.
Okay, and there is last question regarding the royalty on ma'am, I have a client. He has make a remittance to UAE company under royalty, and they have not providing no PE certificate. What should I do? Should I deduct TDS as per royalty section?
So if no P certificate has not been given, then you should consider this as a business income and do the higher rate of TDS. Because if you do the TDS as per royalty at the lower rate of tax, and if the department asks for the no P certificate, you are not having the document, then department can ask for the higher rate of TDS, that is 35% business tax rate applicable on business income. So be cautious. If the no P certificate is not provided, to do the TDS as per higher rate of tax.
I hope the questions are clear, the doubts are clear. Thank you so much, Gitanjali ma'am. It was such a wonderful session, and we really kept it we are completely enjoying that. And thank you all the attendees. Thank you so much. Thanks a lot. Yeah. Over to you, Grishma. You can introduce.
Yeah, thank you, Harshada. Thank you, Gitanjali ma'am. It was a lovely session. I just want to say a warm welcome to all. I would like to express my deep gratitude to ICAI and Yashashwini for giving this opportunity for all women entrepreneurs as well as individuals and professionals. This uplifts us and morale also. So your efforts are truly commendable. Thank you so much. It is my pleasure to introduce CA Jhalak Parekh, who's a leading partner in a leading CA firm. She has over 10 years experience in system audit, income tax, project finance, and audit field. She, along with her professional excellence, she's passionate about music and classical dance. So a warm welcome to CA Jhalak Parekh. We are very interested to know how you're going to help us understand about the Excel and its tools. Thank you so much.
Thank you so much, Grishma ma'am, for a warm welcome. I am truly honored to be part of this series Yashashwini, which an initiative that celebrates inclusivity, diversity, and leadership amongst the women CAs. I am also thankful to all the coordinators and moderators for organizing this series and inviting me to give this session. So today, my topic of the session is advanced Excel tools, smart tools for women CAs. I would like to share my PPT and I would like to show the live examples along with me. So is my PPT is visible? I'm sharing it. I hope it is visible to everyone. Ma'am, can you confirm?
Yeah,
Yes,
Jhalak,
ma'am,
we
it is
can.
visible.
Okay, sure. So today my session is on advanced Excel. So I'm assuming that we have basic Excel. We are all occupied with that. Now, what I am taking today is about flash fill, some database functions. One is on conditional formatting. There is function on index and match, and some multiplier functions. So firstly, I would like to take you all through this flash fill function, which is available from Microsoft Excel version 2003 and 13 and onwards. So if you have a Excel that is above 2013, then this function will be there in your Excel. So if you have what is flash fill function? So basically, the function is it analyzes the pattern of input data that we are giving to Excel, and then out of that it is giving us result for the whole database. So if we have a data like this, we have some names and we want to get a first name and last name out of this. So I am giving this Rahul and in capital MEHTA, and I want for all the data first name and last name I want this to be sorted. So what we can do, uh, we can simply just go to the function on the home page, that is fill function. It has a flash fill. So if I'll flash fill, it will automatically giving us the data of all the first name. It is also capitalizing first letter as I have input for first letter as capital. It is also capitalizing all the first letter. There is also shortcut for this, Control E. If you press Control E, it will automatically give you all the last name out of the given data. Again, if you have some complicated data and you want to change the order of this data, like this is Sunny 445 moon, and I want data in the form of moon 445 Sunny. So simply I'll put moon 445 Sunny. And I'll press Control E. It will automatically change the order of all the data below this row. If I have data like this, sales data of different dates, and I want date only from this data, I'll say 24. I want a year from this data, that is 2018. I'll press simply Control E. You can see that it is sorting all the date and years from given data. Again, if you have a data like this, first name and last name, and you want to change the order of the data like last name and first name, you can do this by simply giving input as last name and first name, and then press Control E. Automatically, it will change. It will change order of all the data, subsequent data. Again, if you want to form a sentence out of a given data, if you have a customer named Vijay, whom you sold 15 laptops in the month of Jan, and you want to form a sentence out of this. So we'll type sold 15 laptops to Vijay in Jan 25. And now we'll press Control E. So you can see that there is some error. It is showing that sold 20 printers NT IL. Like why it is showing? Because it is not understanding that two is some separate word I want in all the data, because it is taking from laptop. So from all the data, it is taking fourth and fifth letter. So how to rectify this error? We'll also give another example to it to make it learn more properly. So if you change it in a second sentence, it is automatically going to analyze the pattern of input and give correct result. So many times we have a GST number data and we want to extract a PAN out of this. So what we can do, we can simply just give PAN from one GST, and we have a state code. Like we want to have a state code 02. and we want this data from for all the GST number. We'll get a PAN and state code from all the data. If you will press 02, it will automatically change all the data. So you can see that for such a long data, it is giving result in just one click of a button. Now we have a flash fill complex button, like we have a complex data, like we have a data of different names and its short form, but the short form is not given in a proper manner. In some cases it is given in a bracket, somewhere it is given in a dash, somewhere it is given in a 3-4 letters, not properly short form. So what we can do, we can use this, we can train Excel that what we want out of this. We will type BD as output and you want the short form of all the data. You cannot do that just simply by control E. See, because it is not understanding what is your requirement. To make it learn more properly, you need to give another example to it, that I want data of only the thing that is already given as a short form in my database only. So if you type this, it will give you correct data. Again, you have some data like this. You have a subject name, result marks and percentage, and you want output of for all the data. You can simply type it as digital marketing 39 and percentage. Now press Ctrl E for all the columns and you will get your sorted data within a few clicks. So this is example of how flash fill function can make our life easy. Another function is indexing. Indexing, like, and many times we need to give a serial number to our data. Like we have this kind of data, some are blank and some are having a data. I want to give a serial number to only the data that is having some data in this. So I'll just simply put 13 June 25. It is automatically changing serial number of all the data. I'll put here some information. It is automatically changing index of all the function. How we can make this kind of indexing? So for that, we can use the if function, like say if the context of the function is that if the C5 is having some data, then use this function count a. If it is not having a blank, then simply just have a blank, keep it blank. If it is having some data, if C5 is having some data, then count a from A4 to C5. So it is going to count all the data from A4 to the given cell and it is going to give us a result. So by using this kind of function, we can very easily keep indexing as a serial number. So we can do this like 13 June 25. You can see that it is automatically changing index of all the previous next data as well. Another function is many times we have data like this, like we have a sales data of 4 zones: west, east, south and north, different products and different sales. I want that all the given row should be having this zone data as well. How we will do this? We will manually, if we'll try it, it is going to take a long time. We need to copy and paste in all the cells. Sorry. I want to give a function, we use a single function to fill all the blank data. So how we can do this? Select all the data where you want to fill the data. Then go to find select, go to spatial, select blanks. It is going to select all the blanks. Now you want to add some data to all the blank cells. Then first write the function is equal to up. And now very important, if you want to have this same data in all the blank field, just simply press Ctrl Enter. By pressing Ctrl and Enter, it is going to paste the same function in all the given blank cells that you have selected. Another important function for us is we are experiencing difficulties in sorting dates. Many a times we have some GST file, we have some sales data, we have some TDS file where we have dates in very different formats, and we want to have a proper formatted cell date for our filing TDS returns or GST returns. So how we can do that? There are two methods for this. First is simple method, that is you can just type date value function. Date value function, what it will do, it will give you proper formatted date out of the given data. So it is giving me this, but if I try to paste this in all the given data, it's not going to work everywhere. In some cases it will work, some cases it might not work. So what we can do, there is another function, that is date. What this function, it is joining all the year, month and day, that arguments that we are filling into it. So first argument of this function is year. So how we can get year? With the another function, that is year, will input this data. So what this function do? This function extracts 2025, that is year, from the given data. So it will give us a year 2025. Now the second argument of this formula is month. So we need a month from this. So we'll simply type month and give it the same day, same cell reference. Third argument of this cell is of this function is day. So we'll type day, and again we'll give it the same data. We'll close our bracket and let's find out. Yes, it is giving us a result of properly sorted date out of the given data. So we can paste this formula in all the cells and let's see whether it is giving us a proper formatted date or not. So yes, it is giving us properly formatted date, which we can use for all our return filings and all our compliances. Okay, from again, many times we have for TDS returns, we have different types of transaction, different dates of transaction. We want to find out what is the exact due date of TDS payment. So we know that TDS challan due date is 7th of next month. So from the given date, how we can find what is the TDS challan due date of this? So we can use function EO month. What this function do? EO month is a function that is giving us last day of the month of a given date. So if we'll use EO month for this 14th Feb 2025, it will give us 20th February 2025 as the last date. So we'll in the first argument we'll give it a cell reference of the date. You want to add or less one, then you can put here, but we don't want to add or less one. We just want February last date. So this function will give us last date of the function, last day of the month. Then we can add 7 days. As you know, 7th is the last due date of the TDS return. So sorry, TDS challan payment. So EO month plus 7 will give us data result as 7th March 2025. So if we'll use this same function for all the cells, it will give us it will give us result of all the transaction. In a single click, we'll get all the challan due dates. Now we want to have a first date of the month. We want first date of every transaction. Like I want 1st February, 1st March, 1st January out of this. So how we can type this function? Using the same function EO month, start date. Now month. We'll go 1 month back, like 31st January, and then we'll add 1 plus 1 to it. Then we'll get a 1st February as a result. So I'll select -1 and +1. So it will give us a result of first month of all the transaction, first day of all the month of the transactions. This is a another function of conditional formatting. We know in basic Excel that conditional formatting function works as it is formatting all the data that is satisfying a given criteria. But there is some complexity. Like I have a data like this, and there are employees and their monthly salary. And I want to format all the rows of where the salary is more than 80,000. There is some question. Okay. Yes, ma'am. I'll share the PPT with all the participants. So I want to format. If we will try general for conditional formatting to all these cells like this conditional formatting. Format cells that is value greater than given cell, like 80,000 is our criteria. So what it will do, it will only format the cells of the columns. This column. See, it is only formatting cells that are having salary more than 80,000, but I want to format the whole data. I want to format the whole row, not only single monthly salary data. So how we can do that? For that, first you need to select all the data which you want to which you want to apply the conditional formatting. To select whole database, now apply the conditional formatting. New rule. Now in this, use the last option, use a formula to determine which cells to format. So we'll type a formula here. I want to format if 85,000 is greater than 80,000. Now it's a very important thing here. If I'll type this formula, it will only check the formula of B4 cell. But I want to check the formula for all the rows. All the rows. So I'll remove the dollar sign from row, but I'll keep the B, that is column, as a fixed value, and I'll keep 4 as a changing value. And I'll set the format as, I want to give a yellow format for all the cells where the rows B column is having a value greater than 80,000. We'll keep B27 as a fixed cell because we don't want to change that. We'll keep B column as a fixed cell, but we'll keep 4 as a row number as a changing value. So we can see that it is formatting all the rows which is having a salary data higher than 80,000. I hope I'm not going very fast. We are running short of time and I want to cover everything. So I'm going little bit fast here.
Yeah, Jhalak, a little fast because even if you're trying to write down something, it's little difficult.
I'll share the solved sheet with everyone.
Yeah, that would be
all
great.
the formulas in that.
That would be great. Thanks.
The next function is index and match. So what this function do? Index is a basically function which is going to give an index number of a given criteria. If you will give it a criteria index of, if you will give it a criteria like I want a value from specific row and column out of the given database, it will give you a result of that data. So let's see first the syntax of the index function. So like we have a data of 4 students, like number of student 1, 2, 3, 4, and there are coaching for 1, 2, and 3 weeks. And there is a data of like for one student for 1 week, the coaching price is per student per month is 500 rupees. It's going to reduce as the number of students increase, and it's going to increase as number of weeks increase. I want, if for 3 weeks and 2 students, I want a cost per person. So how we can do this with the help of index function? I'll first explain index and match as a separate function, and then we'll see how we can use both function as a combination. So let's see what this function is. Index. First argument of this function is array. Array means a database from where we want to get a result. So we want to get result from this array. So we'll select the whole area of a database. Then second is a row number. Row number is these are weeks are given in the row in this table. So which week we want to give get result from? So we want to get result from week 3. So that data is given in cell number F10. Sorry. That is here in F10. And second, third argument of this function is column number. Column is there are student numbers in the column. So from cell number F11, we'll get the column number. We'll select F10 as the third argument, and we'll close our function. So we are getting result as 500 cost per person. So let's see, for 3 weeks, 2 students, the answer is 500. So this is how it is, how simple this function is. So syntax of the function is, first you need to give a row number, and second you need to give a column number. But if we don't have another many rows, we have data like this, we have only single row data, like there are medal, gold, silver and platinum, and for third rank I want to get a result. So we can simply skip the second argument, that is a row number, because we don't need to specify row number here. There is only single row. First, for index function array, first we'll give it an array from where we are searching our result from. And the second argument, that is row number, we can simply skip it and simply go for the column number. That is 3. And close the function. We'll get result as platinum. That is the third column of this array. Okay. The same function will also be apply if the data is in the single row style data. It will give this array and column row number. It will give us the same result. Now, if we have two different set of database, like we have two different continent, Europe and Asia, and we want to find the data. We have data like for Europe continent, there are 4 countries and there are 3 details. And for Asia also there are 4 countries and there are 3 details. I want from the second continent, third country, second detail. So how we can use it on a when we have a multiple set of database. So we can use index function. Now array. For array, we want to specify 2 different sets of area. First one is this. We'll put a comma and use the second area. Now you will see that as soon as we are giving a comma to this, it is going for the row number second argument. It is understanding that second what we are giving is the second argument, but that is not true. This is also part of the first argument only. So we'll put this data in another bracket. So as soon as I will put this column, you can see that it is understanding the whole data set as a first argument. Now, second argument is the row number. So row number is the country number that is defined here. Third argument is the column number that is defined here. And the another, when you have 2 different sets of area, you also need to specify the you want the data from first array or second array that is given in a continent. It is giving us a 30 million. So let's check whether this continent number 2, that is Asia, country number 3, Malaysia, and detail number 2, 30 million population. It is giving us result as a 30 million from the given set of data. So our formula is correct. Now, another joining function to index is the match function. So what this function do? Match function, it simply look for the data, given data in a given database. So we have data like this. We have 4 names and we want to find Rakesh. We want to find where at what position Rakesh is in the given data. It is at the third position, but how we can find with the use of the function, that is use a match function. First argument is the lookup value, that is a Rakesh is the lookup value. Put a comma and then lookup array. which array you are looking from. We are looking this Rakesh name from this database. So specify the array. And last one is the match type. So 1 is for less than, 0 is for exact match, and -1 is for the greater than value. So we want exact match of Rakesh from the given data. So we'll put a 0 and close the argument. So it is giving 3 as 3. It is there in the third position. Same way for the values, we want to find 600 from the given data. So lookup value 600. Second argument is the lookup array, and match type is 0. Close your bracket. You will find the result that 600 is lying at the second position in the given data. So we have seen match type 0 in both this example. Now let's see what is -1 and 1 match type. One match type is when you want to search highest value lower than a specific value in a series. You need to use a 1 as a match type. And reverse in exactly opposite to it is if you want to find the lowest value higher than the specific value, then you need to use a match type as -1. Here, very important thing to understand is that whenever you are using a match function, when you have a values as the data, your data needs to be sorted. It will not work if your data is in a very scattered manner. You must have data either in ascending order or a descending order. So if you want to search value, higher value, highest value lower than the specified value, your data must be in an ascending order, because Excel will start searching from cell 1, 2, 3, 4. If will find the data from first cell, it is not matching your criteria in the second cell, it will stop working there and then only. So for finding a higher value lower than specified value, then you must have data in a ascending order. If you want to find the lowest value higher than the specified value, then your data must be in a descending order. So let's find out how this works. So if you have a data like this 10, 20, 30, and 40, you want to find out where the 25, what is the position of 25 in a given data. So you want to find the data that is highest value lower than a specified value. You want to find out because the data is in ascending order, you want to find out what is the highest value lower than specified value. So 20 is the highest value lower than the specified value. So we'll type this function as match 25 lookup array, and we want to find out the highest value lower than the specified value. So our match type would be 1. Less than value we want to find out. So the match type is 1. If we will try to use a -1 here, what it will do? It is going to show you error because your data is not in a descending order. For using a -1, you must have a data in a descending order. For having a 1, your data must be in a ascending order. Similarly, if you have a data in a descending order and you want to find out what is the lowest value higher than the specified value, then you need to give it you need to specify the match type as -1. So let's say lookup value 25 out of a given set of data. And what will be the match type? It will be -1 because we want to find data greater than a specified value. So we want to find something greater than 25, that is 30. So we'll give it as a -1 and it will give us result as 2. If we'll try to use a match type as a exact match from 25, it is going to give us a result is going to give us a result as error because there is no exact match to 25. We'll type match function lookup value 25 out of the given data and match type as 0. It's going to show us error because there is no exact match to it. Now we'll see how we can use both the function in a combination. So we have a different set of bus A, B, C, D, E, and it can accommodate different sizes of passengers like 54, 50, 22, 15, and 6. So I want to find out, I have a 52 passengers on a tour and I want to find out which bus I must choose. So for 52, I must find a bus that is having a higher value than the specified value. So lowest value higher than the specified value, which is going to be correct answer, which is going to give us a correct answer. So lowest value higher than specified value. So what will be the match type? Lowest value higher than the specified value. So match type is -1. So we'll use this function is equal to match this 52 in a given set of data. And see, our data is in a descending order. So we can apply -1 as our last argument. We'll use -1. And it is giving us first, the data is lying in the first row, but we don't want to have a which exact position of data of bus where it is lying. I want bus A, B, C, D or E. I want specific answer from this. So for that we must use a index function along with match function. So use function as index. Now specify the area from which you want your answer from. I want answer from this array. So we'll specify this as an array and we'll put a comma. The second argument of index function is row number. That row number is already we are getting from the match function itself. So we have already done that part. So we'll close our bracket and we'll see whether we are getting answer or not. Yes, we are getting a bus A as the answer. See, now if we'll change 25, it is going to change us like for 25 passenger, we need to have a bus B. We'll say 10 passenger or you'll say 3 passenger. It's going to change automatically the bus size that is needed. Similarly, if I have a data like in ascending order, we want to data that is lowest value higher than the specified value. We want a data highest value lower than the specified value. Like we have a data like this 0, 30. If from 0 to 30, the answer should be fail. Grade should be fail. From 30 to 50, it should be pass. From 50 to 70, merit, and from 70 and above, it should be distinction. So if I have a pupil score like 25, I want to find out the grade that is the highest value lower than the given value. So highest value given than lower than the given value. So what match type we must use? So highest value lower than the specified value, match type is 1. For searching highest value lower than the specified value, we must use match type as 1. And for match type 1, our data must be in ascending order. So our data is in ascending order. Yes, it is in ascending order. So we can use this function. Like we'll use a match function, lookup value 25, in where it is going to look up from this database, and match type should be 1. Okay, but it is giving us 1 as the answer, but we want to give a grade to this thing. So we'll use again with the match function, we'll use index function. We want answer from which area? This area, put a comma and simply close this. Okay, so it is giving us answer as fail. But if we'll copy this, it is not going to give us a proper result. Why? Because we have not specified, we have not fixed the cell references. If you want to fix the cell, cell references, we need to add a $, or we can use a F4 to keep it as a fixed cell formula. So wherever there are areas, we need to fix these cell references. Okay, now if we'll copy this data, it is going to give us a perfect result. Now there are some database functions. I'll take it later on. First, I'll use some important function, that is MMULT. So what is this function? MMULT is a function which is multiple multiplier function. It is multiplying different sets of data, and it is going to give us result for the whole data in a just simple one click of a function. So we have data like this. We have one chocolate factory which is producing different size of different types of chocolates, milk, dark and white, and it is having giant, standard and economy sizes of box. In giant box there are 50, 50, 50 milk, dark and white chocolates. In standard box there are 30 milk, 20 dark and 10 white chocolates. In economy there are 20 milk, 5 dark and 5 white chocolates. And there are data of another data of customer orders. That is, we have a 300 giant box order, 400 standard box order, and 500 economy box order. Now I want to find out what is the quantity of this different chocolates that I need to produce. So what generally we will do, we'll multiply 300 with 50, 400 with 30, 500 with 20, and we'll get answer as milk for milk chocolate. Similar calculation we'll do for all the chocolates. But there is some simple function. Just select all the data for where we want the result from. Put MMULT, the function which multiplies multiple data. Okay, for the MMULT function, you need to give two different sets of area which you need to multiply with. First area, remember this very carefully. For first array, you need to give a row numbers that is equal to row number of the resultant area. And for the second array, give the row column number that are equal to the resultant column numbers. So for array number 1, our result area is this is our result area where it has only one row and 3 columns. So first, where number of row matches this data or above data, this data where it is our row numbers are matching. Put a comma and then give a second array number of columns. So we have 3 columns in the result area, and also given our array, there are 3 columns. And we'll close this and simply close the data. It is going to give us result for all the data. So it is very simple to get a result for all the multiple multiplication. We can avoid that. Similarly, if we have a factory which wants to produce 20 milk chocolate and 0 dark chocolate. Factory 2 that is wants to produce 20 milk and 1 dark chocolate. There are factory number 3 which is producing 10 milk and 5 dark chocolate. And for all the milk chocolate, there are different set of ingredients like butter, eggs, and sugar. And for dark chocolate also there are different sets of ingredients. Now I want to order butter, eggs, and sugar for different factories. So we can use this, get this by this function. Select all the area, use MMULT as a function. Array number 1. We have a result area. We have 4 rows and 3 columns. So first we will want to find out 4 rows. In which area? In this area there are 4 rows, and in this area in result there are 3 columns. It is here. There are 3 columns in range number 2. We'll close it and enter. So simply via one single function, we'll get result for all the functions in a one click. Okay. Now I'll explain some database function. I'll take a quickly this database functions as well. We have some database functions. Like we have a database like this, a very complicated database. Like we have different products that are having different wattage, life hours, brand, unit cost, quantity, boxes in stock, and value of stock. And we want to get a result like average of bulk products which are having brand name as bulk, and average cost of all the bulk products. I want unit average cost of all the bulk products out of this. So remember, in all the database function, like it is being d average, d get, d min, d max, or d sum. For all the functions, the very important thing is the title. the title of this database is very important. We whatever title are here, we must give it our criteria as well. If there is a product as a date in title in the database, we also must specify it in our example as well. We want wherever we are giving our criteria, the title name should be matching. Okay, so we'll type this function as d average. Select the whole database. Always select a database for all the database functions. Select the database along with its title because titles are very important here. Select the whole database along with titles. Now we have given the first argument database here. Now the field. Field is a argument from where we are looking our answer. We are looking our answer from unit cost. We want average unit cost of bulk product. So we just simply need to specify the title header. Only unit cost you need to specify. It will find result from the whole database, which is having a unit cost for the given criteria. Now put a comma. The last argument is the criteria. What is our criteria? Our criteria is product bulk. Again, we are specifying it along with the title. Now close the bracket. It is giving 1.59. So for all from the whole database where the product is bulk and unit cost is, it is giving us average of all the unit cost. We can apply it when we have multiple criteria as well. If we want to find out the average cost of product bulk and brand horizon, we can also specify this as D average. Specify the whole database. Specify the whole database. Then give it a field. We are finding result from unit cost. And then give a criteria, the last argument, that is product bulk and brand horizon. So it will give us result for bulk product, horizon brand, average cost. We can also apply this where we want to find out the wattage is greater than 50 and but less than 100. We can specify this by two different set of criteria. Simply similar way, you can specify a database, use D average, specify the database. The second argument is field, that is unit cost, and last argument is our criteria. Okay, we'll close the bracket. It will give us data from bulk product that is having a wattage more than 50 but less than 100. It is going to give us unit cost for all the given criteria. Similar function are dget. Dget is a function which is going to give us result from the given database, which is specifying the given criteria. It is going to give us result of a unique database only. In a given database, there is a product bulk where there is a brand horizon, wattage 100 and life hours. I want to find out the number of items that are in stock for the given criteria. So we'll use a dget function. Specify the database along with the titles. Give the field. We want to find out the number of items that are in stock. So boxes in stock we want to find out. And then last, give it a criteria. So we'll see that for a bulk horizon brand, 1000 life hours and wattage 100, the quantity in stock is 5. But if we'll have a two set of data which is satisfying the given criteria, it will give us an error because dget is only going to work where there is a very specified unique value in the given database. So if we'll change our database, like we'll have two different data like this, it is going to give us error because it is not unable to find a unique value for the given criteria. So dget function only works when there is a unique value we want to get as a result. Okay, so if you want to if you want to use this, like you want to sum total of all the quantities for given criteria, you need to use a dsum as a function. If you will use a dsum as function here, it is going to total all the data that is satisfying the given criteria. Okay, so it is giving us a total of 5 and 3 as a boxes in quantity. So for that, we need to use a dsum as a function. There is another function dmin. Dmin function gives us the lowest value of for the given criteria. Like for a bulb and horizon brand, we want to find out the lowest value in the stock. We want to find out the lowest value of stock for the product bulb and having a brand horizon. So we'll use a dmin as a function. We want to find out the second criteria field, that is value of stock for the given criteria. Okay, so for a given criteria, it is giving us result like 10 is the lowest value of stock for the horizon brand bulbs. Similarly, we can use the dmin function for a different set of criteria. Like what we want to find out the lowest value of stock of bulb that is having wattage greater than 80 but less than 100. So you can use this function as is equal to dmin. Give your database. We want to find out the value of stock for the given criteria. It will give us a result of minimum value of stock of given criteria. Same exact opposite of this is tmax function. It is going to give us result of maximum value of data for a given criteria out of the database. So we want to find out what is the largest value of stock of product bulb having wattage 200. We need to use tmax as a function. Specify your database. Specify the field from which you want to answer from, and then give your criteria. Close the bracket. It is giving us result of maximum value. Similarly, if you want to find out for a very large number of criteria, like I want specifically for bulb product horizon brand 1000 life hours and 100 wattage, we'll say tmax. Specify your database along with your titles. Specify the title of the field from which you want answer, and then specify the criteria along with your titles. Okay, so that is it. It is giving us answer. We have already seen the sum function. It is going to sum value of all the data that is satisfying the given criteria. We want to sum total of number of total value of stock of product bulb and brand sunbeam. I'll specify the database here. I'll specify second argument as a field and last argument as the criteria. It will give me sum total of all the stock of sunbeam brand bulb product. Also, it uses the similarly. It can also be applied where you want to find out the where is wattage having a greater than 200. Use dsum function. Specify your database. Specify the field, and lastly specify the criteria. Will give us sum total of all the data having the value of stock that is greater than 200 wattage, sunbeam brand and product bulb. So that is it from my side. I hope this has been helpful to all of you, and if you have some query, we can take up that.
Yes, Jalak, thank you so much for the insightful session. We do have some queries which I'll take up very quickly.
Yes.
So one of the query is whether subtotal formula can be used instead of the average. So sub equal to subtotal, bracket 101, comma, inverted range, inverted close, comma.
Sum total, it will work only for the totaling. We are finding the average of the cost, average unit cost out of the d average function. So when you want to find average of data, you need to find either use the average function, and when you want to give some criteria as well in the database, you're also giving in d average function. We are not only just doing an average of all the data, we are also giving it a criteria. Like we want to give it a criteria like find first product bulb from the given database, find brand horizon, then only it is going to make an average of all the data that is satisfying the given criteria. You can also use if function if you want to average, use average and if function. But again, it is using two sets of function. With the d average function, with the single function, you can simply do average of all the given data.
Understood. I hope the query is solved. The second query is, can you explain row number and column number in index function?
Okay. So in index function, you have seen that the first criteria is, let me do there. In index function, the criteria for the first argument is like we have data like this. So in the index function, our first argument is the array. The second argument is the row number, and the last argument is the column number. So first, in the given second argument, we must specify the row from where you want the data from. So in the given table, our row is in the weeks format. We have 3 weeks, 1, 2, and 3 in a row given in a row, and students are given in a column format. So first we'll in the first criteria we'll give the data of from which week we want answer from. So week are given here. So we have specified F10. 3 is the week, and 2 is the number of student that is given in the column number. So last argument is the column number. So first in the index function, you need to specify the row number, and in the third argument, you need to specify the column number. Even if you have different sets of area, then in the last argument also you can specify the area number as well.
Okay, understood. And the last query that we'll take up is how to put formula for differential salary in a quarter in salary sheet of all employees.
Sorry, if you have a data like this, if I'm getting correct.
So the question is how to put a formula for differential salary in a quarter in salary sheet of all employees.
So you have some data like this A, B, C, D, data of differential salary.
On how to reach out the customer, when to reach out the customer, so that we efficiently deliver what we want. So when I say deliver,
this is for quarter number 1 and quarter number 2. You just want to. Is this the correct thing? I'm not getting. What is the question?
Actually, that is what the person has put as the question.
Okay.
You're going correct.
So if you have different different salary, you can just apply one formula here. You can copy paste it. I think there is some misunderstanding in the question.
Yeah, I guess it should be more elaborate.
Yeah.
However, I just request the concerned person to drop us a mail, and we can get in touch with the
Yes, sure.
speaker, and the speaker will be able to help us.
Yes,
So, with this, we come to end of our session, and we sincerely thank our wonderful speaker for appraising us, and also our gratitude to all the participants for taking out time to join the session and making it a successful one. Thank you so much.
Thank you so much.
set of controls that have to be done every month, every day, and then something more.
So we'll be getting this, right? Jhalak, how do we get the PPT? We'll be sharing it across.
I can share here if you want.